Alright, MiddleAgedWhiteGuy Reacts back again today with another video for you. Today's video is going to be a bit different than my typical video. And if you're new to this channel, you just found me through this video. Typically I do music reaction videos, and I've sprinkled in, other content besides music here and there. And this is some of that other content right now. So before we even get started, just going to say right off the bat, I'm not a financial advisor. This is not financial advice. I just want people's thoughts on this strategy that I've kind of developed here. I don't know, you could say I'm developing, just the strategy I'm using right now. See what you guys think. All right, I just want to throw it out there, kind of tell you what I've been doing, and we'll go from there. We'll see how it goes. See what you guys think of it. Now, I'm not going to tell you how to trade in this video, or technically, or I'm sorry, or actually tell you the strategy I use, to read my charts. It's not important, okay? If you're going to try to do something like this, you want to know how to read charts and do some technical analysis, at least a bare minimum amount, okay? Okay, so like I said, no financial advice, not a financial advisor. If you're taking financial advice from a guy in a hoodie and a beanie and who hasn't shaved in like 2 or 3 weeks, you're probably better off either burning your money or just throwing it at a bunch of lottery tickets. So let's get that out of the way right off the bat. All right, so I got this idea. First of all, me and Bitcoin go back a long way, and I do not have a good relationship with Bitcoin. All right, because I could have been a millionaire, but I'm not. So went with a different asset instead. Because I was kind of weighing the two, and not being, big time computer guy, I didn't understand what Bitcoin was at first. So it was, $30 a coin. I passed on it and got into a different asset class altogether. And yeah, Bitcoin outperformed the one I chose by just a little bit. But anyway, neither here nor there. So anyway, we all know how volatile cryptocurrency could be. Now, Bitcoin, not as bad as it has been in the past, okay, but it's still big swings up and down, and it's easy to lose a big chunk of money in one day, or lose. First of all, you don't lose until you sell, all right, at a loss. So just remember that, everybody. And that can scare people, so they don't really want to put their money into it. And like, I've been in that camp, because that's kind of, I'm more conservative with how I invest my money. I want safer returns, okay, which I'm at the age I should probably be more aggressive, but that's neither here nor there. Anyway, so let's get into the strategy I'm using. And I got this idea because a long time ago, when I was researching stuff, I came across a strategy called trading the gold-silver ratio. And typically what you would do, let's say you have 60 ounces of silver, and gold is 30 to 1 ratio with silver. All right, so that the spot price of gold is 30 times what the spot price of silver is. So in that point, you would take your 60 ounces of silver, trade it for 2 ounces of gold. You wait till down the line, gold went to 60 to 1 ratio, and then you would trade 1 gold for 60 ounces of silver. So you'd end up with 60 ounces of silver back and 1 ounce of gold. Easy, right? Easier said than done, but still, that's the theory. So if you perpetually do that, you keep doing that, and then you do it in larger and larger amounts, eventually you're sitting on a big pile of free gold and silver. So it's like, how can I kind of do that with Bitcoin or cryptocurrency? You can do it with any one of them. And I'm doing this on Robinhood, and I probably shouldn't after what the crap they pulled with GameStop, but I'm just interested in playing the volatility, okay? I'm not worried about owning the coin at this point, and I need it to be a free transaction for this to work, okay? I can make it work without it, but it makes it a little bit more risky. So let's get into how exactly I'm doing this, and I'll show you exactly how well I've done and compare it to, and it's not going to be exactly an apples to apples comparison, but how well if I would have just taken my initial money and then just bought it and held. Okay, so like what's the difference between just buying and holding that whole time, or using this strategy that I'm using? Okay, so let's get into this. All right, so right here, okay, so right here you have spot price Bitcoin right now, and here is what I'm holding right now. Okay, so I have $1,420. Now, see that $420.21 or 9 cents now? That is how much profit I have made doing this since September. Okay, this $1,000 is the capital I am using to make that 420. So I'm actually in the middle of a play right now, which am I making money on it yet? No, because I bought it a little bit higher than that. So okay, so I'm in the middle of the play right now. I'm holding this for a little bit, and I'll sell this probably tomorrow morning at some point. Maybe we'll see how it goes. But anyway, let's get into this. So let's go back to September 17th. What's going on? Come on. There we go. Oh, okay. All right. So when I first had this idea, at first I was just going to do it at a very small scale, and I bought $100 and held it for a few days. I was losing some money on it, so I'm like, you know what? I need to do this at a bigger scale anyway. So I bought a grand. Okay, so I figured I'll do it with a grand. So we'll say we started this on September 20th with the $1,000. All right. Like I said, this isn't going to be exactly an apples to apples comparison, because sometimes I use more than $1,000, and you'll see. So I bought it there, and then we tank that day. So I buy more at the lower cost. All right. So whatever this averaged out to be, it's somewhere between 42 and 45. Roughly what, 44-ish, 44,000, say I bought it at. And we'll call it 45 that we bought initially into at. So waited a few days after I DCA'd down on the 20th and sold it, and accidentally sold off some of my profit. So I sold the initial $100, the initial $1,000, and the initial $2,500. So you can also say, what was that, $2,600 essentially. You can also say that I started doing this with $2,600, but my intention was always to do it with $1,000. So, you know, you'll see how this goes. Like I said, it's not going to be apples to apples, just straight buying $1,000 and holding it. But so I sold at 26. I accidentally sold $17 worth of my profit by accident. I don't know how that happened, but I'll incorporate some of that back in later because I make a little boo-boo. So okay, so we're off to a good start. We made a little bit of profit there. I can't remember what the number was off the top of my head. I had enough of it that I accidentally sold a little bit back. So we started on the 24th then. All right, we bought a grand at 41, sold it at 43 on the 26th. All right, so you made more profit there. So I'm only selling off the capital that I put into it. All right, and I'm keeping the profit. So the profit has a chance to still go on these runs when, like, Bitcoin's hitting all-time highs. It also has a chance to tank, but if it has a chance to tank, you're just limiting essentially your risk. It's not even a risk anymore, because it's money that's free. It's Bitcoin that's free. So it just limits your downside, but it also limits your upside as well. All right, so sold 1,000 on the 26th. We bought 2,000 on the 27th. And again, I'm still getting used to doing this. I accidentally sell off some of my profit on the 28th, $82 worth, when we sold at 43, which was okay because I was able to buy my $82 back the next day at a slightly lower cost. So you got a little bit more free that way. So see, that's the thing about this strategy. I could do this on the way up and I could do this on the way down too. So I can sell, if it's on the way down, I can sell all the profit off, let it drop, and then buy that amount back. And I'll end up, because the whole goal is to accumulate Bitcoin, essentially. The profit doesn't necessarily matter as long as you're gaining Bitcoin. Did it again on the second. Bought 1,000. Bought it. Sold at. Sold 1,000. Okay, so and this is just a small amount. So yeah, I'm not even catching. A lot of times early on, I caught some big rises, but then you don't even have to catch big ones. You know, I bought at 48.1. I sold at 48.6. All right, that's free Bitcoin. It wasn't that much profit, probably like a couple bucks worth, but it was Bitcoin being accumulated. Bought 2 at 45, sold it at 45.3, bought it at 45.2, sold it at 45.3. Okay, so that's not even a big move again. So you kind of see how this is going, right? This is how every move I'm making, I am selling off the capital that I'm putting in. I'm only risking it for a short time, and then accumulating Bitcoin and accumulating profit. Where was the, hold on. There's one I want to show you. So like, you know, you can make mistakes and you can come back from this. So tapping a couple times. Okay, so if we go to like the 18th, okay, I bought 1,000 at 62.1. It drops. So what do I do when it drops? Dollar cost average down, 6,100. I bought it at. Same day. This is all the same day. Sold it at 62.5. All right. So if I would have just held this all day, I would have still made a profit on the same day. But I was able to take advantage of a dip, add another 1,000, and then take my 2,000 back at a profit and more Bitcoin. So that's like kind of the strategy I'm using here. And like I said, you can do this both ways. You can put 1,000 in, take 1,000 out. At a profit, you have more Bitcoin and your profit stays there, and it can run or it could fall. I want to get more aggressive with the selling off the profit and buying it back at a lower price, but I want to get more of a profit built up before, and just so I can just risk portions of it instead of the whole thing. But so far, so that's basically what I've done in a nutshell there. Let's go. No, hold on. Let us go. Sorry about that. That was screwy. Let's do this. I can get back to that screen. Keep some sort of privacy here. Okay. So yeah, so since September 17th, I've made $424.30. So if you consider just like the $1,000 initial capital investment, if I would have just bought and hold, that would have been at 45, and it's at what, 63 now. So that is at 63. We'll call it 64 just for. So if I would have put 1,000 in and held it, this is 64. It's 30%. So that'd be roughly 30%. It has ran 30% since then, and I have made 42% on it. And like I said, most of the time I'm trading when it's sideways. All right, you know, and I've caught a couple of early ones. Early on, I caught a couple of big jumps from like 41 to 43, 45 to 47 or whatever. But like a lot of them are seriously on October 20th, 66.2 to 66.4. 10/27, 59.3 to 68. You know, 68. So it's like not huge moves. So it's like, even though this has taken big sweeping runs and big dips, just trading when it's in the channel like this, I have made 42% profit off my initial $1,000 capital that I have put into it. So yeah, what do you guys think? You think it's smart? You think maybe I should just buy and hold? I mean, can I keep making profit, making free Bitcoin this way, and then how do I scale it up once I get to a certain point? You know, because obviously it'll hit a point where I have more free Bitcoin and free profit, you know, than the $1,000 of capital that I'm trying to just trade and buy and sell with. So I don't know. That's it. What do you think? Let me know. Peace.